You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. Well, banks and jobs. That's all anybody's talking about now. And the question is, hey, what does it mean to you? What does it mean to the economy, to your investment portfolio, and to your retirement? And on that note, we got Ed Siddell with us again. Ed, it's always great to have you on. So, hey, job numbers, they look maybe better than they really are.
Yep. Well, first of all, thanks for having me back. And, I think they're misleading. I think a lot of the jobs that we're seeing right now are not career jobs. They may be second and third jobs, which is, telling us that people, they're not meeting ends meet. And so they're having to get those second and third jobs. I don't think these are the ones that have the healthcare and the 401k and the retirement and all the other benefits that come along with it. But the big thing that it's telling me more than anything else is that what the feds are doing is it's not working. And they're trying to slow down the economy. They're trying to punish small businesses for something that they have no control over. What I'm talking about is, the government overspending. I mean, that's the issue. That's where the problem lies. And we're still having that issue today, even as it relates to these bank failures.
Mm-hmm. So there's too much debt. Debt's been increasing geometrically. The economy is going backwards, if anything. Yeah. And where is that going to leave us here?
That's a great question. I think we're in a situation right now. First of all, let's talk about the banks. They said that there's no bailout, so it's been a no bailout. Which is really, when you're bailing out the banks, the only way to do that, you can't create money out of thin air without printing it, and that's really what they're doing, and that's in essence another round of quantitative easing. So, that adds to inflation, because if you actually look at the Fed's balance sheet, at least what they reported, what they removed from it, and then what they added back on, we wiped away any assets or any liabilities that we took off. So really, in essence, that's another round of quantitative easing, which just continues to add to the inflationary pressure. I mean, when you think about small businesses, that is the lifeblood of our country, okay? And as they continue to raise rates, the credit continues to tighten, and small businesses, they need that credit to continue to grow and expand. If they continue to slow down the economy, which is obviously what their goal is, it's really going to crush. And I think a storm is brewing. I really do. I think I said it the last time we talked. I think we're in for a recession that's deep. And the fact that the feds even said that we're in for a mild recession, I can't remember the last time they ever admitted to whether inflation, recession, or anything. That just kind of leads me to believe that, a storm is brewing.
All right. So the storm's brewing. So what do you do about it? How do you protect yourself from the storm? You don't want to be out in the middle of the Atlantic when a humongous hurricane hits. I mean, I was just in Florida, and a couple of weeks ago, it was a week ago, actually, a tornado, EF2 tornado hit 500 feet away, and I was oblivious to it until I went outside and saw all the damage.
Oh, wow.
But then it occurred to me, it could have been me in there. I could have been hit by that tornado, and I didn't even take it seriously.
Yeah, and you know what? What a great analogy. I think that's what we're seeing right now, because we're getting so many mixed messages, from, those on TV. Hey, don't worry, we're in the middle of a bull market. To the Treasury, to the feds. Hey, everything is fine. Don't worry about it. The banking system is fine. Don't worry about it. The U.S. dollar is strong. Don't worry about it. And how's the old saying go? Ignorance is bliss, right? For us, it's all about the hedge. That there's a slowdown because last time we talked, we were betting on oil. With China opening up, we thought that the demand was going to be high, but the fact that it has dropped significantly, just in the last 45, 60 days, that's telling us that it's not just the U.S., it's a global slowdown. So what do you do? For us, it's being liquid. You got to have a little bit in the market, but I really like gold. Not just the gold and silver stocks, but as well as the mining stocks, but the physical. You've got to really hedge against the U.S. dollar right now, because if they continue to print the way that they are, then you need to figure out, okay, well, what's a good storage of value? And when it comes to the stock market, I still believe there's a couple really good companies out there that have very strong balance sheets. And even if they have hiccups, I think as far as a long-term play, those value companies, whether they're dividend or not, that just have really strong balance sheets, that's really the place to go right now, and have a large portion of your portfolio in money markets, short-term treasuries, so that it's liquid enough that if and when things turn around, you can take advantage of some really good buys.
All right. So I'm buying what you're saying, but, so you want to load up on liquidity, obviously, wherever possible. What about this concept of paying down debt? I mean, a lot of financial advisors say you should do it, but when you got inflation at double digits, your debt's getting effectively paid down by the Fed, isn't it?
That's exact. I agree completely. Yes. And that's exactly it. And, I'm paying down debt right now. I know cash is king, but especially if you have a low interest rate, it doesn't make sense. Now, obviously, if you have credit cards and you're paying, 20, 25%, whatever you bought, you're buying again every 4 or 5 years if you're just making the minimum payment. So those are that's the type of debt that you want to get rid of. But as far as the long-term low interest rate debts, I just, hang on to them. I would not pay them off. At least that's what we're recommending to our
low interest rate debt. We're talking 5% or less.
That's absolutely. Well, we're looking at it depending on the math, for your pretty close, we're saying about 5.25. So in everyone's situation is a little bit different, but usually the average that when we're running through our debt calculator, it's usually about 5.25.
Right. Okay. So, hey, I got one of our FSN community members sent a question that I don't feel qualified to answer, but perhaps you can. She said she's considering putting in solar, all right, for 2 reasons. A, to bring down her monthly payment. 3 reasons. B, because there's a 30% tax credit. And
right.
C, in case there's disruption of the grid. The rate on that is about 6 or 8%, but you immediately, effectively, it's like it's on sale for 70 cents, right? Because you get that 30 cents on the dollar kicker, and then she believes she can save somewhere about $2,000 to $3,000 per year at current rates. Is that a good thing to do? Assuming they've got the money and they're liquid enough to handle it?
You know what? I agree with you. I'm not sure I'm qualified to give an opinion, an expert opinion on that. But ironically, I had a conversation with a gentleman today who's a contractor, and he installs the solar panels on the roofs. And I asked him today, I said, what is the break even? Because we're here in Ohio. And he said, if you're here in Ohio, even with the 30% discount, your break even on that is, a little over 10 years. Now, obviously, if you're in Florida or, Arizona, it's a much shorter time period. But I think those are the things that you really need to look at before you delve into it.
Yeah, I think she was in maybe New Mexico. So that's one of those places that gets sun even better than Florida because they don't really get rain in the Southwest, right?
Yeah, and I would venture just as a shot in the dark, their break even's probably going to be around 3 years, maybe even less, just because they have sun so often. But again, I'm not qualified really to answer that on its merits. It looks like it might be a good deal, but I don't know for sure.
Okay. All right. Well, hey, it sounds like it's certainly worth looking at, especially if you have a large tax bill and if you're in a high bracket. Well, it doesn't even matter. It doesn't matter what your bracket is. You're getting a tax credit. So if even if you can't use it all this year, you can carry it forward to subsequent years. And
that's right.
At 70%, at 30, it's effectively a 30% off sale, sponsored by Uncle Sam. Now we could argue
sponsored by all of us.
Yeah, whether it's a smart move or not, probably not. But on the other hand, oil supply issues are definitely going to come into play. So you can see substantial increases in energy and utility rates, right?
I still see rates going up. I mean, you can't help but to think that they're going to, just because we're not producing any energy here, we're still importing it. So, when demand turns around, it's going to shoot up. I mean, they have a monopoly on it, and we're kind of in handcuffs. We're playing catch up as far as that goes.
Yeah. All right. So, high paying debt, we want to get rid of low coupon debt and actually play into a better financial strategy then.
Yes, absolutely.
So jobs. We get these flowery, flowing job reports. Do you believe them?
I mean, it's just like the unemployment numbers. I mean, they're all skewed. Once you've been unemployed for over a year, you're off the rolls. And there's no way to know what those numbers are and what kind of jobs they're actually counting. In best case scenario, like I said before, I think that these are second and third jobs and with no benefits, and that really doesn't help, the working class by any stretch of the imagination. And they're the ones that are struggling right now, accumulating all the credit card debt just to be able to, keep up with inflation.
Yeah, just to buy groceries at Walmart, right?
Yeah. Right. Well, what's bad when Whole Foods, the average shopper there is no longer shopping at Whole Foods and shopping at the Walmart supercenters. I mean, that's kind of the telltale sign right there.
Hey, they used to call it the whole paycheck once upon a time. Now they've renamed it. It's whole life savings.
Yeah, very true. Very true.
All right. So inflation beaters, like besides eating Spam instead of steak, doing less, how do you get more out of your money?
Boy, that's the $1 million question, isn't it? Just those assets, whatever it is, whether it's gold, silver, land, real estate, those things that are not going to continue to devalue. As far as buying food, shopping at those stores where you can get good deals, whether it's an Aldi, a Walmart, whatever it is, Costco, where you're getting better discounts, and the average price is already the sale price. I think in Walmart's report that came out in November actually said that those customers that were shopping already at Walmart, they're now buying the generic brands, and those that were at Whole Foods are now shopping at Walmart. So instead of buying those name brands, everyone's kind of stretching those dollars, a little bit further. But, here in Ohio, what we're seeing is, a whole nother economy as it relates to these local farmers and these farming stands. And, they're selling, meats, chickens and cows and pigs, and neighbors kind of going back and forth. And, the grass-fed beef, and it's actually cheaper than what you're getting in the store. So, maybe getting together with a couple families and everyone, maybe buying a quarter of a cow, and stretch that dollar, and have it go a lot further. And plus, it's healthier for you.
Right. And plus, stop buying processed foods.
That's absolutely.
You got to have junk, at least make the junk from scratch. Going out fast food is more expensive than making this stuff at home.
Oh, it is. I just heard that McDonald's is raising their value meals. I think now it's up to $9. I mean, my goodness, it's fast food, but it's definitely not cheap. And, I'm not sure how healthy it is either.
No, we know about the health aspects. It's garbage, and it's going to definitely impact not just your lifespan, but your quality of life while you are alive. So,
Oh, yes.
let's not bother with that. But hey, we could go over a lot here, but I kind of like the idea of bulk shopping. But stick to your list. Don't go buying like on a shopping binge at Costco. Buy the stuff you really need, because you will save money if you buy a case of paper towels rather than buying onesie twosie at the supermarket. If you buy a case of toilet paper, all that stuff. Plus, it's a lot less aggravating because you never run out of stuff when you buy it in bulk. Hey, Eddie, appreciate you coming on, giving us insights into these important matters. If we want to reach you, where do you inhabit these days?
You can reach us at egsifinancial.com. That is going to be the best place to find us.
egsifinancial.com. That is in the show notes on this interview on financialsurvivalnetwork.com. While you're there, make sure you go sign up for your free newsletter. If you got a question for Eddie or myself, KL@Kerry Lutz. That's the magic email address, and we'll get you an answer quick. Eddie, always a pleasure. Thanks so much for stopping by.
Hey, thanks for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.